Well, hello everybody, and welcome to another edition of Hawk's Scan Sentry Report. I am Hawk Arps, Vice President of Arps Traders Toolbox, and this is the Scan Sentry Report for the week beginning Monday, December 9th, 2013. I want to thank those of you that made the webinar this weekend. We had a really good time, a nice full house, and I'd like to just carry on a little bit and look at some of the setups that we were talking about. We were discussing the trend exhaustion 1, 2, 3 setup, which tries to identify pullbacks in a trend using our trend exhaustion 1 indicator, which is this dark green one here, and combining it with our pullback 23 indicator, which is this little bit lighter green. And so when we see both of those pretty much right next to each other, we are usually looking at a pullback in a trend, which is identified by pullback divergence, which, if you might remember, is higher lows in the price met with lower lows in the oscillator. So you can see here we get the lower lows in the oscillator, the higher lows in the price. So we do have a pullback divergence and a trend exhaustion 1, 2, 3. Let's take a look at one other setup that I mentioned in the webinar, and that is identifying our trade setups at significant support and resistance levels. Now you can see on the most recent bar of Great Plains Energy here, we got a pullback 23 on the same bar, that's the most recent bar, as we got a pullback signal on this uptrend line. So I like the fact that we're seeing acceleration in the direction of the uptrend as it tests this uptrend line. Granted, we are looking at 3 different resistance levels, actually 4 different resistance levels that we've tested here in the last year. So we could easily bounce off of this, but if we're going to try to break through this level, it's good to get your entry price as early as you can. So I'm looking at this pullback 23 on the trend line as an opportunity to look for a breakout beyond the $25 level. Note how this pullback 23 creates a nice pullback divergence for us as we see lower lows in the oscillator, particularly radar 2. We see higher lows in the price, which this trend line is showing us the higher lows in the price. In fact, we have 2 lower lows in the oscillator here. So I'm looking at this as a pullback divergence opportunity and a potential trade to the long side. Once again, I want to thank you for taking the time to watch this video blog. I hope you got something useful out of it. I want to remind you that all of the examples shown on today's presentation are for educational purposes only. We are not licensed to make buying and selling recommendations, but we are licensed to make some of the greatest technical analysis tools known to man. So may the trend be with you.